Good morning, everyone. We will start the morning call. Indian markets ended down for the seventh straight day and hit a 4-month low yesterday. Asian markets are up 0.25% in line with similar gains seen in US markets yesterday. SGX Nifty is indicating flattish opening. In US, the data on Monday showed the core capital goods orders accelerated in January, beating forecasts, while contracts to buy previously owned homes, US homes, rose the most in more than 2.5 years in January. Monday's data comes after hotter than expected personal consumption expenditure report on Friday, which reinforced expectation of the US Federal Reserve needing to stay on the hawkish path for longer. I will now invite the technical team to take the call forward.
Thank you, Priya. Good morning, everyone. Yesterday we saw that Nifty made a low nearby important 200 average, bounce back that level. We expect today's sitting in positive side open and uh, remain positive. If Nifty sustain the 17,000 17,500 level, then we expect further rally towards 17,800, 17,700 in upside. Immediate support place around 17,370, that is near the 200 PM. Bank Nifty yesterday we saw that they were trading in the positive side and sustained the immediate level, that is 40,300. So we expect positive side in bank Nifty and upside the next 40,700, 800 next target for bank Nifty. Immediate support place around 40,000 and 39 870. Nifty Finance currently trading near the support zone. And that support place around 17,915, 17,860 at downside. Upside first immediate resistance place 18,100 and 18,200. So all three index we expect bounce back rally at this level and remain a positive side for the next 1 week point of view. Uh, Stock specific Bank of Baroda, SBI, ICICI Bank. In banking side, these three stock looks positive. Power grid also look positive at current level. We already given call in SBI and buy call at current level. So we expect the further rally to continue towards 538, 542 in upside and support place around 516, 520 at downside. That is for technical derivative I can say.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as we are witnessing that from past 1 week, we are continuously seeing that the selling pressure has been witnessed in the market, and from 1 week, we are also recommending a sell call in the market. As on the monthly call, also we have told that the Nifty is likely to drag down towards 17,300 to 200 level on the lower end, which might be the supportive level for the market. Currently, as per yesterday's scenario, as we are seeing that as per the OI positions, heavy call writer positions got added up in the system, while against that put writer position at 17,500 and 600 level got liquidated. So the next support for the market on intraday basis would be 17,400 level on the future front. Once if Nifty breaks 17,400 level, then new shorts can be created again in the market, because at 17,400 level we are seeing that the put writer positions are getting added up on the nearest timer, while against that we are seeing that the call writer positions have also heavily added at a 17,400 level. Almost 7 million positions of call rate got added at 17,400 strike. So a 17,400 will act as an important level on the future front. Once if it breaks that, then again longs need to be exited in the market, and shorts will be created, which might take the Nifty towards 17,200 to 17,000 level. While on the pullback front, we are seeing that the Nifty is likely to give pullback towards 17,550 to 600 level. Once if Nifty again comes towards 17,550 to 600 level, there might be a sell and rise strategy in the market, because if you look at the overall scenario from the FI front, also FI is also into heavy selling zone from past 1 week. Yesterday also we have seen that the FI were 2,000 crore on the selling front. While the PCR yesterday closed at 0.72 level, the upside level for the PCR would be 0.78 to 0.84 level. Once if PCR comes around 0.84 level, then again it will take resistance around those levels. So keep watch on the PCR. While the FII India Weeks yesterday closed at a 13.88 zone. Once if India Weeks close around this zone, there might be some point of a drop down in the India Weeks towards the 13 to 12.5. And India Weeks has created a base on the downside towards the 11 to 13 ranges. So once if India Weeks continuously comes around this range, then we might expect some pullback in the India Weeks also in coming trading sessions. So in today's session, we might expect some range bound to pullback session in the first half. And again, if in the second half Nifty manages to hold above 17,500 level, then we might expect some stability in the market on the upper front. On the stock specific, we expect stocks like Bosch Limited, Canfin Home, and Gale. These three counter looks positive in today's trading session, while on the negative front, we expect Emphasis, GNFC, and ZIL. These three counter looks negative as per the OI position. So that's it from the derivative front. Thank you.
Yeah. On the hotels industry, meetings and events linked to G20 as well as corporate summits and seminars have led to substantial increase in demand and room rates for hotels in key cities. Hotels went for a significant rate increase in the quarter beginning October 22, and rates have hardened further in the current quarter. Room rates for five-star hotels in key business cities have gone up by about 20% since last quarter of 2022. So in a matter of couple of months, we have seen this increase. This is positive for Chalet hotels, Indian hotels, and Lemon Tree hotels. Thank you.
Good morning. Mastech has announced a strategic partnership with Retail to help e-commerce and omni-channel retailers to optimize their retail value chain in order to attract and convert and retain digital consumers. This is neutral to the company. Thank you.
Good morning. Foseco India Limited has posted the result yesterday, and the result has improved. Revenue grew by 20.9% YOY at rupees 105.7 crore. EBITDA margin reported at 17.1% as against 14.6% in the last quarter. And PAT reported at 12.3 crore. The stock is trading at a PE of 27.7 times to TTM EPS. Rain Industries Limited result was reported and the result was okay. The revenue grew by 35.5% YOY at rupees 5,457 crore. This was sequentially down by 2.2%. The carbon segment revenue increased, driven by higher volumes and overall increase in raw material prices and operational costs. Advanced material segment revenue declined due to lower volumes driven by reduced production on account of lower demand. And cement segment revenue increased due to higher volumes, which was offset by lower realizations. The margins were trending downwards toward 12% as against 15.5% in the previous quarter, and remained flat on a YOY basis due to increasing raw material cost and declining realizations. The stock is trading at a PE of 3.6 times to TTM EPS. Thank you.
Commodities team can take over.
Yeah, thank you, Jan. Good morning, everyone. So in today's session, we might see a pullback in commodities. So one can initiate a gold around 55 500 and maintain a stop loss of 55 250. We expect prices to test 55 800 to 900 levels. So buying for pullback is recommended. Silver to as long as holding 66 500, 63 500, one can initiate a buy and higher target of 64 700 to 65,000. In crude oil, there could be some sideways movement. Prices are resisting 6400 to 6450. All in all, could be in a range from 6200 to 6400. NG, we have witnessed a pullback and prices are likely to correct now. So 225 to 30 are, if it is resisting 225 to 30, then we recommend to sell with a stop loss of 235, and all on lower end 215, 210 should be the targets. In metal front, we expect prices to pull back, and copper can test 760 to 65 levels. So buying is recommended with a stop loss of 750. Though one can also initiate a sell from 765 and maintain a stop loss of 770. Zinc, we expect prices to pull back till 272. So as long as holding 267, one can initiate a buy and maintain a stop loss of 265. Similarly, aluminum also we recommend to go long and maintain a stop loss of 208 levels. On higher end, 212, 13 is the possible targets. Yeah, that's it from us. Thank you very much.